Right, how we doing? Got a quick chance to try and make a video. I don't know how long this one's going to be because I don't have an awful lot of time, but I am currently looking at Endava, I don't know, I ain't got a clue how to pronounce it. Technology services company, based in the United Kingdom, but floated on New York Stock Exchange. I must have looked at it before at some point, or I've put this on by accident. Generally, a red flag means I'm not interested in it at all, like remotely at all. Don't bother looking at it in the future. But I'm looking into this, and I don't think I have, so I don't know where this red flag's come from. Probably a mistake. If I like it, blue will go into the watch list. Green's actively trading. Yeah, so Endava, I suppose just before I get into it, I did just look at Weight Watchers. I didn't like it, to be fair. Just come out of post-bankruptcy. It has been a large insider buy, 643,000. That was in November, by the look of it. There is a large owner, 21% of their portfolio, Invesco Senior Partners. But it was Weight Watchers. WW International was Weight Watchers. Post bankruptcy, they had something like 1.6 billion in debt, and now they've only got like 470 billion from the reorg. But if you were an equity holder previously to that, you got shafted really by this post bankruptcy thing. I think it said that your shares are now only worth like 9% what they were previously. Share count's barely changed post bankruptcy, but the credit holders have ended up with like 91% ownership of the company, I believe. It just doesn't look very good. There's no downside protection or anything, and I'm definitely going down the route now of looking for downside protection, whether or not that's liquidation value or says at the top here, I can't think. Got baby brain. Let's get at the top of it. This is all companies that I've done previously. Liquidation value, reproduction value, or basically when there's great returns on capital or stuff like that. So that's the three things that basically, if we don't have any one of them, I'm not interested. So Weight Watchers, let's see if we can find it a minute, get down there quick because I've done quite a bit now. There we go. 100 odd pages to go through. Can't be bothered to scroll down through them all. But yeah, there's no liquidation value or anything in Weight Watchers. Let's go down to the balance sheet. So book value of $4, but tangible book value is negative, almost 5. It's only around 185 million in true current assets and only about 9 million in PP&E. Intangible assets and goodwill, like 3/4 of the total assets. I don't generally like that. Yes, there is definitely some value in the Weight Watchers brand. Most people have heard of it. They're not doing very well, so what that value is, I don't know. I generally don't take anything other than tangible stuff. I think that's just a normal value investor way. So yeah, simple free cash flow, negative 45 cents a share. 3-year average is negative 63 cents a share. CFO, you can't even get positive operating cash flow. So for me, it was just not worth even doing any sort of like discounted cash flows because, yes, all right, there was insider purchases, but look at this. I don't know, the business is still declining. So it was just quite an easy pass for me. The only thing I did do is spend a bit of time on figuring out what happened post bankruptcy. Yeah. Anyway, back onto Endava. 2 different classes of shares. This is a class A that we're looking at. Class B is got 10 times the voting rights, I believe, of the class A. No insider buys on Open Insider. No real people of significance owning it fund wise. It's not really the sort of company I'd look at either. They're quite diversified, which I suppose some people would like, but it's also reasonably complicated in what they do. For me, it's not classic value investor, I suppose, not overly confident in technology companies and how they earn money. It's not that I don't think I can figure it out, especially when you've got things like AI and all that nowadays. You can get them to break it down to you like you're an idiot, you know. So generally not something I would look into. Got several different segments. They call it a vertical, industry vertical, apparently. Majority of it's in North America, 33% is in the United Kingdom, 23% in Europe. But each vertical I have broke down into what it actually does. Like I said, you can figure this stuff out if you really want to. Depends how much time you want to waste. But balance sheet, $10. This is where I'm at now. We're literally up to where I am now. Almost $11 in book value, but nothing really intangible book value is negative. But what I was going to do, I'll just pull this off screen a minute and I'll just tell you what I'm going to type as I'm going. I was just looking at what the insiders own. Like I said, there you go, Class B. 63% of the Class B is owned by insiders, by board directors, effectively. They don't own fuck all of the Class A's, but why would they? There's no benefit to them, I guess, if they're voting. There you go. Yeah, that's 10 times there. Each Class A ordinary share is entitled to 1 vote per share, and each Class B ordinary share is entitled to 10. That's effectively them wanting to use outside capital, but not wanting to lose control, effectively. So that is where we are at. That was the last 20 Fs. That is what I want by the look of it. Let's have a look at what the balance sheet and all that is, see if we can break it down. Upside down compared to the other ones we look at. That fucking, what have we got here? Billion in total assets, of which over half, 60% is goodwill and intangible. So I'll write that down because I said generally I don't like that sort of thing. 60. I've got a bloody microphone in the way now. I've got to get used to typing with the microphone in the way. Can't see my keyboard. 60% of TA equals intangibles and goodwill. Right. What else have we got? 60 million in cash. I don't believe there's an awful lot of debt in this company. Is that total liabilities? Or not? No. So you've got to add these two together, have we? You've got total assets, but not total liabilities together. We've just gone straight down to the equity here. Anyway, only 14 million in PP&E. Got a lot of leases. Generally, there's no resale value in any of that. Generally, trade and receivables. Can't normally take all of that at face value, but yeah. Is there downside protection here? What would we say? Even if you were generous and took them all, the receivables, what have you got there? About 270 in cash and equivalents, 14,284,000. Property, plant and equipment. You are just above. No, you're not, are you? Because there's 300 and something, 350. What does it say on my? Because I've already dropped it in here. What are they saying is total liabilities on my? Total liabilities 360, yeah. So there's no downside protection effectively, not from a liquidation standpoint. Let's write that down. No downside protection. Just about negative. I will write that because it's not like it's way off. It's close to having downside protection of some sort. I mean, you would still lose a significant portion of your money, but you wouldn't potentially lose it all, I guess is what I'm trying to say. what's going on with the cash flows then? Because we got a $7 share price, supposedly 87 cents a share in simple free cash flow. So let's see what's going on the 20th. Just make sure the figures are correct. 12 months ended. How many shares are outstanding? Where does it say? 58, 59. 59 million to be conservative. So 52 million operating cash flow. Purchase of non-current tangible assets proceeds. Payment for acquisitions. I mean, acquisitions are non-recurring, but then look at this. Each three years in a row, they've done an acquisition. Payment for acquisition of subsidiary. Net of cash acquired. Yeah. So they're obviously part of their business model is potentially to buy things. Look at this. Look, cash flow from operating activities has shrunk massively. Even with quite a large acquisition in 2023, they still would have had positive simple free cash flow. Does it go back 3 years? Revenues dropped slightly. Cost of sales gone up. Total cost of sales, no, total cost of sales have actually dropped. Oh, no, I'm reading the wrong way around. Total cost of sales have gone up. What a fucking idiot. So gross profit's down. Profit before tax is down. SG&A costs have gone up. It's better than it was last year. Finance expense, finance income. Changes and differences in translating foreign operations and net investment. No idea what that fucking means. We can find out. The amount of other conversation. Okay, yeah. Total comprehensive income for the year attributable to equity. So where does that start as negative? No. Interesting. What's going on there? Equity holders of the company. Items that may be reclassified subsequently to profit or loss. Well, that's significant. That hugely turns it around. So what does this mean? Can I copy and paste that? No. I might have to type it in. Let's ask ChatGPT. What does this mean as it could, spell that wrong, as it could materially impact income? Foreign currency translation. Reports its local currency when consolidated in reporting the value of foreign assets and liabilities changes due to currency exchange rate. That change is not included in net profit. It goes to OCI. That was OCI. Investing activities, I don't know. Subsidiary has 100 million net assets start of the year. Doesn't affect cash or operating income, but it reduces equity on the balance sheet. Right, okay. It's not part of net income. It can eventually hit profit if reclassified. Okay, why this is relevant? In Europe, while it doesn't affect cash flow of corporations, it changes equity and can make the balance sheet look weaker or stronger. In extreme cases, it can trigger technical covenant breaches of debt agreement. Bottom line, this line reflects the impact of currency fluctuations on foreign subsidiaries. financial statements, it does not affect profit, but large swings can materially change reported equity. Is there a portion in the balance sheet that looks out for it or not? Where does this show up in the balance sheet? Accumulated other comprehensive income. I can't see it. In short, foreign currency translation don't hit income, but they're reported in equity on the balance sheet. Equity down here. Maybe it's in this section, I don't know. Alright, anyway, cash flows. If it doesn't affect net income, I suppose it can be written down maybe, can it? So what were we saying? 42 million in opera free cash flow. What did we say there was? 59 million, 42, 59. What do I say? What does this say there was? 87, yeah, so it's probably around about accurate. 3-year average of 81, so it is declining all the way down. When you look at the share price decline, it lines up, look, 2023. It was huge compared to that. How can you? I'm on the wrong bloody thing. Try again. Here we go. 2021, 2020. Like, it's just been declining ever since then. Thing is, it's got to get to a point because it's a profitable company. Return on capital, tangible capital is about 19% on EBIT and almost 40% on simple free cash flow. Simple free cash flow to market cap. 8 years it take you to buy the company back. 7 times more, 8 times multiple. I don't know, because it's a decline in business. We could be just about to say goodbye to it. This is nice, but if the market is seeing this as a dumb business, no longer growing, declining, doesn't necessarily mean that it's overvalued or undervalued. I'm just saying with my expertise, not that I have any expertise, this is what I'm trying to say, I don't know that I can see a lot of value in it. Let's see. Can ChatGPT tell us? So sorry, what was that? That was EV. Was it? Simple free cash flow to market cap. Right. I generally do it to EV because I like to count debt into it, but I mean, really, it was trading at much less than that previously. This is because this is done on today's current share price, so not on what it was previously. Let's just see what comps there are. I'm not really interested in this now. I'm just going to write here. Free cash flow looks legitimate at, what is it, 0.87 share, but has declined year on year for 3 years. what should we say, no longer a growth story. I think the revenues basically show that as well, don't they? No longer a growth story. They sort of like plateaued, at least in recent years. Gross margins decline as well. Is it worth doing? Have they given any future revenue guidance? We can sort of work out, do a moderate year-over-year decline to 735. So even the guidance is still, that's why the share price is still going down, because the guidance is still declining as well. Net present value calculator here. What are we going to say? What did they say it was? We're going to be super conservative here because it's declining company. 735. So what should we say? 690. I mean, that's way lower than the lower end, but the company's declining. So 690, 123, 123. So where are we? What are we using on the Bri one? Problem is, we're not doing this properly. I can't even remember what's going on with my own bloody calculator. How much is this? Only using 60% of it. I mean, it has declined quite significantly. Is 60% a bit low? You say we use 80% of the margin. Same with that one. What? There we go. That's what I'm looking for. Say we use 80% of the margin. Still, future simplified cash flow multiple of 11, which is higher than what it is now. Bri calculator says 5 to 6. Yeah. There's not really anything in it, is there? It's not. I'm not overly interested in it, but it's not a bad company. It's just a declining company, and I'm not confident enough to pay any more than like 8 times for a declining company where the whole market's like, this is a declining company. I feel like there's better investments. It would take you 8 years to get back your. Let's just write that. Free cash flow multiple to market cap is 8x. What was it to EV? 12, yeah, I'm not interested in these prices. If it gets cheaper, 12x for EV. It will go on the watch list, that's for sure. But yeah, not interested. It is in my new tracker notes. I would just leave it at that for now. Got bloody nose is running like crazy. Or FOF. That was FOF. Or EV. Alright. Like I said, I will give it a blue instead of a red. Not sure where the red came from. Why I wouldn't be interested in something that's got. Not that I'm interested, but why I wouldn't want to watch something that's consistently positive free cash flow. I mean, something will happen now, won't it? And it will fucking go on an absolute run. But for me, technology company, I'm not overly confident on. I have broken down all what it does in its sectors or whatever they call it in their verticals. But yeah, give it a pass on that. There's no downside protection from asset value, liquidation value. There's not really any downside protection from free cash flows, even though free cash flows are pretty decent. So for me, it's just to move on. Universal Logistics Holdings. These do customized transportation and logistics solutions. Okay. New chat. Explain. ULH. What was it called? Universal Logistics Holdings. Universal Logistics Holdings to me. And while it's doing that, we'll go on this side. I do like this new feature. I don't know if it's a new feature or not, but I've only recently found it. Or I can have several things up at once. So now I can have my ULH Open Insider. Nothing going on here as well. What's that? Is this working properly? Who would have had an insider buy-in? Why does it just keep showing up with nothing? Unless there generally isn't nothing. It's very rare for me to find 2 stocks in a row where there's nothing though. Well, whatever the hell that was. It's got stuff. So 2 stocks in a row of no insider buy-in. Don't like that. I like to see that the insiders are invested. Universal Logistics Holdings. Who's holding this then? Anyone of any ilk? Nobody's interested. Absolutely nobody interested in this. Highest position in their portfolio, 0.25%. All zeros, look. Right, what's going on here? SEC, ULH. That. Right, financial statement, balance sheet, straight up. Okay. Strange. Total current assets 429. 27 in cash. Receivables. So they always have their net of allowance is for loss, but like you can't take. I mean, I do sometimes. You're not meant to take all of them. All of the accounts receivables as gospel. Property, plant and equipment, though, quite a lot. You're looking at there, maybe around about $1 billion in tangible total assets. Contract assets, net of current portion. Total current liabilities, 324. There's about $1 billion in bloody long term. Quite a lot of debt. Let's drag it in a spreadsheet and see. It looks like roadkill. Where are we here? ULH. Get data. Oh, not comps on this one. No. Still haven't come up with a more professional way of doing this. It just is what it is. Let's just check. Income statement, balance sheet, cash flow statement. Because sometimes I get it completely fucking wrong. Right. $12 in book value. Tangible book value. Did look quite high, didn't it? Only 26 million shares. So, oh, there we go. Look, this is the problem. Year on year, heading in the right direction, but must be cyclical, is it? does not look good, does it? What was it traded at previously? Price to free cash flow. Yeah. 93 times, 100 times 2024. Started to go wrong around about here. Negatives. So the price was still going up even though the free cash flow was going down. And then it collapsed. 100 times free cash flow. Fucking hell. You wonder where I'm getting that from. Listen down here. If you just follow this this number, what it's doing, it changes with the time period. Tells you at that point in time that price was trading at whatever it was, 100 times free cash flow. 100 times free cash flow. Ridiculous. It was only trading at bloody 38% of revenues. All right, lost you for a minute then. Ran out of memory on my computer, so I just had to delete some stuff. We were obviously looking at ULH, and I'm going to try and get this finished and probably in this video there, because I'm going to have to go through and sort out memory on my computer. I got loads of stuff on here that I haven't put onto the external hard drive yet, like some of the videos that I've done previously. I need to sort that out, but we'll try and finish ULH, because even though I think it looks a bit like roadkill and doesn't look very good, the reason why I'm putting stuff in here is so that if I come across it again on the screen, I can be like, I have looked at this, let's see what's going on. I did that earlier because CRTO turned up. Sorry, I'm trying to do two things at once. CRTO turned up, and so I've definitely looked at that. I went back through here and I seen what was going on. So anyway, just pull this off the screen a minute because we'll have a look at ULH. Universal. All I'm doing now off screen is typing the information into this here, price 16.68. Right, market cap 426 million. 426 million. Enterprise value 1.3 billion. What insider ownership is there? Let's find the 14A. Here we go. Oh, I can come out in the cold. What am I doing? Control F. Beneficial. Let's have a look. Oh, really? Oh, it's all down this one guy, look. 73% of the company. Well, I mean, that's sort of positive, isn't it? Like, you telling me that this man doesn't want this business to succeed? 73.6% of the company. Wow. No insiders, though, is there? No insider purchases. And sweet FA on the funds that own it. And no fund owns larger than 0.25% of their portfolio. It's definitely worth mentioning though that geezer owns 73%. Who is he then? Number 4. Redoubtable LLC. Serves as manager and exercises voting investment power over the shares. Who the hell's Redoubtable LLC? Right. What am I looking for? Oh, we're here. Right here, look. Right, here we go. Just copying and pasting some of these important bits in to what company does. Coordinate freight logistics for businesses, contract logistics, intermodal, flatbeds. Asset light, are they? Asset light, and they got bloody. I thought they had like $1 billion in PP&E. Is that this one? Not overly asset light, is it? It does not own all the trucks or equipment itself. Okay, let's see what that means. I'm sure we can get out of this now. Oh, fucking hell, wrong. Let's get back up on that. I want to ask who that guy is, what Redoubtable is. Can't forget that. Just put a quick note quickly so I don't forget it because I've already gone off of that bloody Ufa Wasser. Yeah, 800 million. Interesting. Asset light, but have 800 million in PP and E. They don't own most of the transportation capacity, use owner operators, third party carriers, and lease terminals. Capital expenditures. Like the asset light branding, it's roughly 740 million in net profit plant equipment reported at the end of 2024. We're in 2025 and it's 800 and something million, but yeah, it was 740 in 2024. Oh, it does say there, 814. Dedicated assets of value equipment that ULH owns. So, okay. Specialized fleet components, tractors, trailers. You said that they rented a lot of that out. Operating strategy as opposed to the assets. Okay. What is Redoubtable LLC as they own 73% of the shares? Limited liability and private entity that beneficially family controlled entity to the Moran family, who are the founders and the okay. Right. Family controlled entity tied to the Moran family, who are the founders and largest owners of ULH. Right. Let's get that in there. What have I just done here? Fuck something up there. Well, that's interesting. You know, that can be a really good thing. They do not want this company to fail, you know. He has voted in investment control, separate LSE practically as part of the Moran family's ownership structure. Right. Isn't some external institution hold essentially a family linked LLC hold? Right, okay. So break down their revenue segments, and geography. I'm going to guess most of this is in America. if not all of it. Value added contract logistics. What I would do, let's do this. And just copy and paste that in. And then it breaks it down. Nice. So 42% is in this. Contractor services, material handling, sequencing, often the most stable revenue source. Okay, intermodal, containers using multiple modes, rail and truck. This segment's faced margin performance challenges recently. Trucking services, traditional, okay, brokerage services, right. Okay, geography, here we go, 97% in the United States. I thought it would be. 97% US. Revs. Basically the rest is Mexico. It isn't, but almost the entire 3% left in Mexico. Tiny amount in Canada and Colombia. Right. What are the future risks? I'm guessing it's cyclical. Is it a cyclical? Inherently cyclical, right? Industry transportation cycles, so cyclical exposure, key future risks, recession, slowdown, fuel price volatility, yeah. Sensitive to retail, driver shortages. Okay. I mean, there's nothing outside of what would be expected by the look of it in risks. Bottom line, cyclical industrial logistics play. Investors should watch economic cycles, freight demand, labour drive, large customer contracts. It's just like that because there's nothing seemingly out of the ordinary. Balance sheet, right? Are we breaking down the balance sheet because there's a lot of debt on it? First off, what we can say, $22 in book value. $12 share in tangible book value. I mean, book value has grown, shrinking recently. The equity's grown quite a bit though for the past few years. $1 in cash. Let's break it down on here. 27 mil in cash. This is just so I can see it quickly from a liquidation standpoint. 277 million receivables. 830 million PP. Now, it depends what this PP is, how much of it you would use for liquidation value. Have they got it broken down? Definitely need to look at the debt. Also very wary that the computer could just stop recording and I'll have to end the video there. Leases. Might not show in the 10Q. Might be in the bloody. More likely to be in the 10K. See, it only comes up 11 times, so look. Just how they break it down. Leases, what are we on now? 7. What is it? Transactions with affiliates. No, they don't break it down. Not in the 10Q anyway. We can ask, do we know what the PP and E consists of? Problem is, they're probably just going to ChatGPT sometimes guesses. Annual report, yeah, 10K. I thought it would be. If it's not in the 10Q, generally there's a lot more information in the 10K. Right. All right. So, what is a likely liquidation value of these assets? Resale value 25 to 40%. Land and buildings 58% book value. I got to be honest, I don't really know how they come up with these figures, because sometimes property's potentially worth more, isn't it? You know. So they're saying around about 50%. That's fire sale. But then obviously, because it's a asset heavy thing, what's like the reproduction value? This is the liquidation value, but what's the reproduction value? What would reproduction value be? Problem is, ChatGPT sort of makes you dumber, in that I would actually like to be able to figure these things out for myself, find them myself. To be fair, I did say it'd be in the 10K, but you can just ask this stuff, and the problem is as well, you just assume that it's correct, which you can't do. I have found that there are often problems in it. Aggregate reproduction value. Is that assuming that you'd buy all your trucks brand new though? Because you potentially probably wouldn't. New prices, yeah, see? You ain't got to buy it all new, have you? You just got to buy reasonable stuff that's going to last. Alright, we'll back this in anyway. So, there's potentially downside protection, there's potentially no downside protection. That's effectively what we're saying. Why is that jumping in a different place? Doesn't matter. Right. Alright, let's just put this in underneath. Like I said, you're relying very heavily on ChatGPT being correct there, but you just got to be in a ballpark, you know? So what are we saying? Statement of income. Oh, they do break it down quite nicely, look. Operating expenses, even tell you what they've done. You don't often see where they break it down so well. So I do like this. Loss. Huge impairment expense this quarter as well. That's what's done that. Otherwise you'd have 20 plus 20 million. Impairment generally a one-time thing. Still quite a significant difference. So there'd have been 80 million difference. But there's 40 there. And there's a huge difference there, look. 100 million difference there. $200 million difference in earnings and revenues. Operating expenses are around about the same. Yeah, they lost on those operating expenses because they had 200 million less. Yeah, literally 200 million straight down to the what's that EBIT part of it? Yeah. Interest, taxes. 200 million less in EBIT. Have I got that on here? This is trading 12 months, isn't it? I said a lot of it was an impairment. Let's see what the impairment was. See if we can find it in here. What was impaired? 81 million. Impairment test. We recognise, which consisted of 58 million of goodwill impairment charge and 23 million related to certain customer relationships and tangible assets. Valuation in motor reporting. Okay. So goodwill write down. Standard. One of the businesses that they deal with. Okay. So potentially a one-time thing. 80 million impairment took earnings negative. Would have been positive if not for this. Then that's going to show up in the cash flow statement. Right, impairment charge to be added back in should be. There you go, impairment charge added back in. So net cash provided by operating activities, 135 million. Depreciation, amortization added back in. What's their capex? Oh dear. Circa 200 million. Circa 200 million, 2 years running that they've got. What's this, 9 weeks? 39 weeks, yeah, three quarters. 2 years running and losing money. What's their biggest quarter? This is all quarterly data here. Q1. Is there any difference? Q1 is quite big. Q4, you would think. It looks like it's just been an overall downturn, doesn't it? Negative, severely negative. Ooh, I suppose you've got to normalise earnings here and see what it really would be, haven't you? They're certainly having problems. What are they doing to turn around the severely negative free cash flow? Gross spending outpaces operating cash generation. That's why you end up with impairments. They got loss-making operations, closest company managed brokerage business. What effects should be seen to business segments by these steps? Was brokerage part of one of their things? Brokerage services, yeah, it was. Income. Brokerage services was 9% of it, 10% almost. Revenue, modest increase if acquisitions expand footprint. Well, they've had a fucking goodwill write down, so the acquisitions ain't exactly been great, have they? Higher positive operating cash flow for better efficiency. Truckloading services, so what was that under contracts? Operation costs. Sneeze, sorry. Shutting down loss-making brokerage operations, likely to decrease slightly. Deary me. It's bloody cold. Right. Under normal circumstances, what were normal earnings? Let's have a look. It all going wrong. Simple free cash flow. Historically. That's what they've got to be aiming to try and get back to, and with such a large ownership. With actual stuff at stake, 125. Oh. Even if you did like 80 cents a share as like a normalized earnings, just to guess off the top of your head because it's below the average, fucking like 20 times earnings. It ain't good, is it? There's certainly a reason why it's trading in the gutter. And then you got the enterprise value. What's the debt schedule? We said we're going to look at the debt schedule. Debt. Ooh. 700 million long-term debt. Equipment financing. Real estate facility. Revolving credit facility. Interest rate quite high as well on the revolver. Look. Financing. 7%. Is there a repayment schedule or not? Maturity 2027. Which one's that? Tell you what, look, what you can do, drag all of this into ChatGPT and then say, get down to the bottom, explain the debt schedule. This is one thing that generally is good for. 400 million maximum. Affirmative negative covenants. Availability, 20 million available. So they've used most of it. Short-term liquidity, large flexible credit line. But they ain't got any money to fund it, have they? What was their cash position? What do you say their cash position was? Wasting way too much time on this because this is a definitive no. 27 million in cash. Maturity 2027. Maturity 2027. So they're going to have some problems coming up maturity for 2032. That's still some way out. $2027, they got a lot matured in 2027. You go to right. Basically going to say no, because even with some normalized earnings, you're way too high. Your debt level's too high. The maturities are coming thick and fast. Yeah. Just see what we got here. Look. Let's say large. Oops, come in here. Large debt maturities in 2027. Currently not enough cash flow or cash to cover. Asset heavy, so they could refinance collateral, subsidiary stock equipment, mortgages on real estate, marketable securities, key takeaways. Let's see what they say at the bottom. Most debt is secured either by assets, hedging reduces interest, subsequent refinancing ensures management is actively managing liquidity and reducing higher cost debt. So there's so-called on the top of it. Maturities are staggered, given some flexibility, but there are covenants. Right. It's a no, isn't it? It's definitely a no. Not going to go on the watch list either. I know this looks beautiful where it's been previously, but doesn't really look very good, does it? Wasted a bit too much time on it, really, I would say, but I like getting stuff into my tracker. So if I ever come across it again, yeah. All right. I'm going to end this video here, and I will see you on the next one. Thank you very much. Like and subscribe. Don't listen to anything I said. Don't know what I'm doing. So, yeah. Good night.